Now, if you see this setup on gold, would you enter or would you pass? Drop it in the comments below because we're about to walk you through this lovely setup that we took on gold. Hey, what's up, traders? We're back in the building again. You know it's Carrie-Ann. And if you're new to this space and you want to understand how these candlesticks can make you money, then all you have to do is to hit that subscribe button, tap on that notification bell so that each time I drop a video, you're notified and you'll understand how to turn these candlesticks into your money-making machine for 2025 and beyond. We're here to help you become profitable. And once we get that accomplished, all glory, all praises to the Most High God. So with that said, I want you to really grab yourself a notebook and a pen because we're going to keep it simple and we're going to make it in a way that you fully understand how to dabble in supply and demand. Now, I know you're probably wondering, what is supply and demand? Now, supply and demand are literally fundamental concepts that drive all markets, be it crypto, be it stocks, be it forex, commodities, indices, you name it. Supply and demand can be used for all of the financial markets, right? And I want you to get this very simple. Supply is how much of an asset like a stock or a currency is available for sale. How much of the gold is available for sale, right? Demand is how much people want to buy that asset. So how many of us as retail traders, how many banks, how many institutions want to buy the gold? That's literally demand, right? So price moves because of the imbalances between the two. So sometimes you're going to have more demand than supply. So when you have more demand than supply, price goes up, right? And when there is more supply than demand, then of course, price drops, right? So this is literally what it is, right? So just bear in mind, if you've got too much supply, of course, everything is going to drop. And if you've got too much demand, everything is going to go up. All right, that's literally what it is. We ain't complicating it. Now, I'm going to be taking you really into a simple 4-step framework that you can employ within your trading when it comes on to, supply and demand. So one of the first steps we're going to be looking at is marking upward zones, right? That is the first and the most important thing you want to make sure that you're doing. Now, what do I mean by marking up your zones? Now, in a sense, we're really going to be looking for areas where we've got price moving aggressively, right? Now, on the charts, you're going to find a lot of this. We're not looking for tiny candles and choppy moves. We're looking for big, huge candles. Now, once we see these candles, those are the areas that we're going to be zooming in on, right? We're going to be zooming in on them because there's something in particular about the fact that we've got such huge candles at these zones, right? So let's take a look right here. Look how massive this green candle is, right? This is a huge candle. But if we zone in on it, right, you'll see that the move continued that bit. So we could even highlight right here as a major area. Now, one of the key things that I like to look out for is to have the power of 3 candles. Power of 3 meaning 3 candles in the same color that are of huge volume. Meaning that if we look at these bit, we've got, green continued here. So I'd more likely to highlight this as a key demand area right here. So what you do is to highlight this candle. There we go. And we want to change this. So we've got our templates and we want to make it demand. So now it's green. There we go. So you can see that we have a little buying momentum going across here. And you can clearly see that it's really, doing that, because when we came back into this area, we rejected, had an engulfing bullish candle, and we gave a few pips up, right? Not a lot, but we had a few pips up. We came back here, did a little bit of liquidity grab, and then we had our demand being activated a little later. So these are areas that we zone in on, right, where we've got aggressive move. So this would literally be a little demand zone where you're having a little bit of respect because price keeps pushing up whenever we get back to this area. Now, if we look at the top section bit, this would most likely be our supply zone, right? We've got some candles here, right? Nice power of 3 move. So of course would be highlighting the candle before. But now that this has taken out this supply area, now we're zoning in on this, right? Because there is a liquidity sweep right here, right? So of course, this is the zone that we're now paying keen attention to. So we're gonna come here, we're gonna look for our supply template, and we're ideally going to be drawing this rectangle tool over our supply zone. So what we're looking for is that whenever price comes back to here, there's potential to sell. So let's drag it across just to see. And as you can clearly see, we came here, respected it, and we had a drop, right? And of course, we're here again, and of course, we're seeing rejection, right? Seeing nice rejection here, not just once, but we're seeing it again. And we saw it before with a nice drop. So what we could potentially be looking for is a short position right here. But now that we've marked our zone, we're not going to rush it. We're looking at marking our zones, all right? Now, one of the key things that you want to be doing, you can mark your zones on the higher time frame if you're a higher time frame trader, right? You can literally do it on the higher time frame. So I could literally decide that, okay, my supply would be here, ideally, right? And drag it across, and you can see that it's being respected. And ideally, you would see that we had more of a demand. This would have been one, but I'm looking for the power of 3 move. We don't have 3 candles here. So ideally, you could highlight even this candle here just before your power of 3 move. You could allocate it here, and possibly whenever price comes back to here, you could potentially get a push up, right? You could. All right, so with that said, once we've highlighted these areas, one of the key things that we're going to be looking for is how price reacts when it gets there. So one, we mark up our zone, and you can do your confirmation to see the trend. Literally, what we're in is a little bit of consolidation at the moment, and that is why we are like within this range here. Can see this is literally here would be your, all right, so this would be your nice demand with price pushing up aggressively here, but we didn't even come quite directly back there. We haven't tapped it directly yet. We're a little bit short. So we've highlighted our supply. Now we've got our demand. And what I love to do is to pay attention to the most recent zones, right? Most recent. So you can see that we've got some aggressive push down. We have been selling off for a bit on gold. So you can see that we've got these aggressive moves. Now, the bigger the candles that you have, and especially if you have those consecutive candles coming in, those are areas that you're going to zone in on, because the potential is that when price gets back to that level, we could do a push down. All right, sorry. So if we're looking even on the 1 hour time frame, I'm seeing nice play even right here, right? So we mark our zone, which is step number 1, and then we wait on price to react. We're literally seeing nice reaction here with a doji. We're literally seeing an engulfing bearish candle. Even on the 1 hour, we're seeing a good play. The candle has not yet closed, but it is a phenomenal play when it comes on to, you know, what we're looking at for price action. right? So we've identified these zones. We're seeing where we are getting some strong movements out of the supply zone, and we've been selling off. So our trend direction has really been bearish. So sales would be ideal, right? Perfect stuff. So mark the zones. And of course, we're aligning with market structure. So that's your number 2 step. Now, I like dropping them here so that you can see them. Of course, we're marking zones. So step number 1, we literally mark the zones, right? That is our supply and demand zones. And number 2, we're aligning with market structure, right? In this case, because we are bearish or really and truly we're looking for sales, right? Because we want to be trading in alignment with the trend, right? So ideally we'll be looking to take sells at a strong supply zone, which we've identified our strong supply zone at this area. All right, align yourself with market structure always. We don't want to be countering the trend. We want to trade with the trend as best as we can. And the more you're aligned on different time frames with the trend, the stronger the probability is for that trade. All right. So with that said, once we've identified that, we're in that trend and we're in this supply zone, that's also a check mark on our checklist, right? And the next bit is to wait for confirmation, and we're literally getting those confirmation. We're getting wick rejection. So ideally on the 1 hour time frame, we're getting these doji and the bearish engulfing. And then when we come down to the 5-minute time frame, ideally we're seeing wick rejection and we're seeing that level of movement to the downside. So we're literally getting these plays looking like this zone is holding and it's going to be respected, right? So these are really key things that you look out for: your wick rejection, your engulfing candles. All of these are lovely bits. And of course, step number 4 is that we manage our risk as best as we possibly can and always try to risk at least bare minimum, right? we don't want to risk too much. When you overdo it, you end up blowing your accounts and having to pump money and donate money to the markets. You don't want to donate money to the markets. You want to be taking money out. So make sure you're a good steward of your money when you put it in the market to be able to take something back out with discipline that you will apply, right? So we're going to be applying at least bare minimum, risking 1% of our money to gain at least 3. So risk to reward, it really matters. Okay, it does. So ideally, we're looking at this, sell opportunity. And what I'd be looking at is really, taking a short position. Yeah. So ideally, I'd be looking to get in here, my stop right there, and I'd be looking to aim right back into this zone here, right here, where we pushed up from previously. Right, I'd be ideally looking to get back into here to make a 1 to 3. There we go. Perfect. There we go. Right, 1 to 3. So I'm risking 1% of my money to just gain literally 3%. All right, so ideally you want to make sure that you're risking properly, right? Because that will kind of keep you in the game long enough to be able to, make substantial profits, right? So this is our setup. This is literally your setup. And remember, make sure you do not risk more than you're willing to lose on any given trade. The only thing that is guaranteed in this game is to lose, right? That's the only thing that's guaranteed. And if you understand that, you'll trade better, right? There is no certainty to make profits. We just try to navigate these A+ setups based on the data that the market has already, given to us, based on our track records, based on our edge, and then we execute. So with that said, let's see how, we move along this supply zone, because we've checked all the things on our checklist. We've marked our zones. We've, confirmed our trend, and we have literally, evaluated where price is at and how it's reacting within our zone. And we've calculated our risk, knowing that we're only risking 1% of our money to make 3. All right, so this is ideally the process that I use every day. I do use it alongside confluences like the Karma, right? I love using the Karma. It is really just an added confluence on my chart, right? So one of the other key things that you could also wait for, and I believe that you could even go down to your 3-minute time frame and all of that to see the Karma changing to red here, because you want that added bit of confirmation alongside price action, right? So let's see if we can get that and get some move into this trade based on our supply zone. So phenomenal. That's the Karma playing out right there, and it's literally showing you red. So we can literally wait until, you know, the Karma turns red within the supply area, and once the Karma turns red within the supply area, we wait for price to pull back into the Karma and reject. Once it pulls back and reject, we're seeing that price is definitely holding within this, you know, supply zone, and we're going to be dropping, right? So wait for these confirmation, wait for the confluences to all add up. And if you have additional confluences that you want to add, you can add and you can take away from whatever is given to you here, right? But just make sure you're doing the right things by marking these zones correctly, you know, waiting for confirmation, trading in alignment with market structure, and of course, calculating your risk appropriately so that you have longer time in this game with whatever you deposit into your trading account. So now that we've had all of these adding up, let's literally see how, you know, this trade plays in our favor. Let's see if we can get some take profits on it. All right, so nice move. Ideally, we're getting some nice move, and that's it. Take profit smashed right there. Literally a 1 to 3 there. So we risk 1% of our money to actually gain 3% in the long run. Right? So I want you to really understand that when it comes on to trading, you just need a process. And I've literally given you a 4-step supply and demand process that you can implement in your trading to make your trading even better and clock profits day after day within the financial market. So if you got any value from what I've just shared with you, be sure to hit that thumbs up. Be sure to drop a comment down below to say that you've gotten some value from this 4-step supply and demand system that I've given to you. And make sure you click the link down below and become a part of our All Stars Academy, where we train you how to become a profitable trader. We're actually having a boot camp coming up quite soon for the All Stars. So if you want to be a part of that, make sure that you click join below and become a part of our academy, where you learn how to become a profitable trader and become a part of our entire system of All Stars. So if you're a true All Star and you've been watching us for a while, make sure you join the academy and become a part of the family. With that said, you can also drop it in the comments down below if you got some value from this system. And remember to put God first in everything you do, because if he's in it, you must win it. With that said, be sure to check out this supply and demand video, because it is also very helpful in terms of, you know, synchronizing what supply and demand is, so that you can actually use it a lot in your trading to make profits within the financial markets. With that said, I'll see you in the next video. Bye.